Oh, hey there, I'm Kai. Welcome back to one of my rentals. I'm just getting ready for my next guests. And speaking of rentals, it's that time again of the year that we all love, tax season. Well, a common question I often get asked is rent taxable income? The short answer is yes, but there's a few key things you should know before paying your taxes. Stick around and I'll give you the contact to my CPA who I've been working with that has helped me save tens of thousands on my own personal taxes. Now, let's talk about avoiding taxes. Slap hands, tax avoidance, not tax evasion. Big difference. Bump this, let's roll. So, unfortunately, rent is still considered taxable income in 2020. Remember, there are only three absolutes in life: death, taxes, and Epstein didn't off himself. Come on, it was just way too convenient. But don't get too down just yet. The gist of it is that rental income is considered ordinary income, and you'll be using Form 1040, Schedule E, to file your taxes. So for example, to keep it nice and simple, let's say that you fall into the 20% marginal tax bracket, and you made $10,000 in rental income. Some easy math, and you'll pay $2,000 to good old Uncle Sam. Now, sounds like a pretty big chunk, doesn't it? Well, the good old boys over at the administration were kind enough to give us a few legal loopholes, also called deductions and write-offs. My next video will be all about these, including one that is quite often missed by newer real estate investors. So remember to subscribe and hit the bell to watch the next video. But let's talk about what Mr. Sam is going to consider taxable and will want from you other than the obvious of any rent payment a guest or tenant pays you to stay in your home. The first not so obvious one that trips up a lot of newer investors, and to be honest, some older veteran ones too, is services received from tenants in exchange for deductions and rent is considered taxable. So if a tenant agrees to paint a wall for $100 deduction in rent, you'd still count that $100 as rental income. Second, any advance payment of rent, for example, your tenant paying first and last month's rent, which is completely standard practice, but whatever year you receive it, you'll put that down as income for that specific year and not the next. This is the same for short term. If a guest pays you in full for a January stay, but pays it in November of the previous year, you'll claim that income the year prior to their stay. Third, any parts of the security deposit you don't return, even if damages occur, whatever portion you keep is considered income. And lastly, the fourth, expenses your tenant pays if they're not obligated to pay them. So for example, if your tenant pays $50 for the garbage bill each month and then deducts that from rent, you're on the line for that $50 as rental income. Now, it's easy to be lenient in our numbers when it comes to doing taxes, but remember the IRS has ways of both randomly auditing and finding where numbers just don't add up. Don't risk it. So I always recommend being truthful in your tax returns and 100% work with a professional who knows the ins and outs and can legally get you to avoid paying taxes and perhaps more importantly, avoid audits. Most profitable properties and investors and landlords actually report very little to no income, sometimes even at a loss for tax purposes. FYI, businesses do this too. That's why you hear Amazon, Nike, Intel, who make billions of dollars in revenue, they don't pay any taxes. But that's another video for another time. The reason how profitable properties don't owe taxes is because taxable income can be very easily and legally manipulated with the correct deductions and write-offs, such as the qualified business income deduction. Ah, I bet you didn't know about that one, huh? Well, it can save you as much as 20% on your tax bill. Now, I'm gonna talk all about it in more depth in my next video, so join me there. And in the meantime, if you don't have a good CPA or accountant yet, whether you have rentals or not, it's always wise to start a relationship sooner rather than later. Unfortunately, not all accountants are created equal. They're just all number nerds, just to be clear. But some are cooler than others and just flat out better. I've worked with mine since I was 21, 22 years old, way before I even started making any real money, and I haven't regretted it once. The amount of money a good accountant can save you or make you is incredible, and it's nice to know that you have someone on your side when it comes to taxes, even if you're randomly audited. So check out my good friend and certified accountant Kevin. I've got his info down below in the description. And if you don't like him or he treats you poorly,
come and tell me and I'll handle it. I'll set him straight for you.
But in all seriousness, he's an awesome guy who I trust with my closest friends and family members. Again, my name is Kai, and if this is your first time to the channel, welcome to the family. Smash that like button for me, subscribe, and I'll see you in the next video. And in the meantime, I'll make it easy for you with this awesome action photo of me surfing in Costa Rica. Click on it and you'll instantly sub to the channel. And I'll put up 2 other videos here and here that I think you'll like, where I talk about how I dealt with rentals and money that got me to quit my day job at 27. I love you all. Kai